What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. I hope you're having a great day. Today's video, we're going to be doing a nice update on the Sofi stock. This is our favorite stock on the YouTube channel, and these price ranges that we are buying in right now are amazing opportunities, guys. I'm going to be giving you guys an update from what I'm seeing that's giving me more confidence in the Sofi stock to be buying into right now. And only if you feel this video gives you a better insight on Sofi, be sure to subscribe to the channel. I'll be keeping you updated daily. And don't forget to hit the like button. Please drop a comment. I'm going to be commenting back to as many people as I possibly can. Let's get into the video. All right, guys, last week was insane. Growth sold off like crazy. Surprisingly, we finished green on a Friday, 1.5% gain, hovering right around $14. Regardless of the short-term volatility, I think anything in these price ranges right now are an amazing buy. You have to see what the big money is doing right now, the insiders, the institutions. Guys, you have to have your research done. This is going to be giving you more confidence, and I'm going to show you what I'm seeing right now inside of this stock. So if you go over to Fintel, you can actually look at the insiders of the stock to see what activity they're doing. Guys, this is Anthony Noto. This is the CEO. We can see the insider purchases, all the moves he's been making, and he's been making some crazy moves last week. And I want you guys to see this. This is your CEO of the company, guys. He is not selling out in bad times. He is buying the dip because he has confidence in his company and the direction that this management is going to bring this company in the future. You can see right here on the 17th, 18th, and 19th, Anthony Noto all last week was making some crazy purchases. He was buying in at 1446, 1378, 1393, bought over 22,000 shares valued around $300,000. So he is putting his money up and he is taking advantage of these price ranges on the Sofi stock. Guys, this is your CEO of the company, not selling out like a lot of these bigger companies have been doing. He is buying the dip right now, as you can see. Just to give anybody new an update on Anthony Noto, the CEO of Sofi, this guy has came a long way to get into the position that he is in right now. We're talking over 20 years of hard work. Started from the bottom, now we're here. This guy was the brand manager of Kraft Foods 1995, 1998 for 3 years. Moved up to Lehman Brothers for a year and then upgraded to managing director of Goldman Sachs for 9 years. Then he leveled up once again, CFO of the National Football League, 2 years and 9 months, about 3 seasons. Went back to Goldman Sachs as the co-head global management and investment banking, 3 years and 10 months. Then he upgraded to Twitter, 3 years and 8 months as the COO and the CFO. And finally, after leaving Twitter, he has made his way to CEO, guys. The #1 spot. He is the leader of Sofi, going into his 4th year very soon. This is his baby. I really see this guy, leading the way for the next 5 to 10 years for the company of Sofi. I'm telling you right now, they went the SPAC route. They gave the retail investors an opportunity to buy this stock at a cheaper valuation than these massively priced IPOs. He is here for the retail investors, commenting back to people on Twitter, letting people know all the ins and outs of the company. Most importantly, helping people get their money right. They have their own, investing ETFs. So that was just a little nice summary to show you. You have the CEO buying the dip with you guys right now. You got to be taking advantage of these price ranges. No one has the crystal ball to time the bottom. If we go back over to Fintel, guys, we can see the biggest institutional investors in the Sofi stock. And if we do a further deep dive, I can even bring the information to you to show you guys what these big money investors are buying the Sofi stock around and what price ranges and averages they have. Look at the biggest institutional holders, guys, we can see right here. The top 4, we have SoftBank, Silver Lake, Price T. Rowe, and Third Point LLC. Guys, the institutional investors now own 40% of the float on Sofi stock. 2.2 billion in holdings, 700 million in holdings, 700 million in holdings, 500 million in holdings, guys. These guys are putting some big money on the line. I'm going to show you guys a little further research of what their price ranges are right now. Guys, this is Silver Lake Group LLC. We can check their, institutional holdings out on Whale Wisdom. If we scroll down a little bit and we see SoFi stock, got that 700 million, holding, just at it. It looks like their estimated price average is right around $19. So what does that tell you right now? We're sitting at around $14, and these guys were loading up months ago on the stock. Heavy, heavy confidence at the older price ranges when this stock was over 20. So it looks like, they are averaging right around $19 on the stock right now. Third Point LLC, we scroll down. This is a massive holding, guys. They have over, 160 stocks. This is like their seventh biggest holding in the entire, holding right now. And it looks like SoFi is average right around 1917, average price paid, on the SoFi stock. So guys, both of these, large institutions are holding right around $19. So this should give you massive confidence to be buying, SoFi around 14. And you can see Anthony Noto was buying up these $13 and $14 dips like crazy last week. That's what it's all about, guys, buying in on weakness. And guys, you can see it's just been absolute madness for the past 4 months on the SoFi stock. We were talking, close to $24 prices, just back in June, and we have just sold off massively. And then this was the earnings report, sold off massively. I'm telling you, this company has been oversold like crazy the past, 3 months. I'll show you guys, my position right now. I have a $15 cost average in this portfolio. I believe my other portfolio, I have like an $18 cost average. So I have, over $60,000 invested over 2 accounts. So my average right now is right around 16 and a half. I'm being 100% transparent with you. That's my price average right now. I do plan on continuing to buy more the next 1, 2, 3 weeks. If we continue to sit around the $13, $14, $15 range, I'm going to keep buying up at these prices, just like the CEO, just like these institutional hedge funds these past couple of weeks. All right, guys, now I want to take you back over to Webull to give you even more confidence, okay? These are a ton of the growth stories that I watch. A lot of the growth stocks that I personally like: Neo, Matterport, Paysafe, 8Point, Desktop Metal, Butterfly, tons and tons of newer growth companies that are just getting started. A lot of them are getting beat down right now, but I want you guys to really see these inflows and outflows and what's happening with the big money, because you're going to be really surprised when we go through these companies right now. There's just one that's just absolutely blowing away, these institutional buys right now. So what you're going to do is you're going to click the specific stock on Webull. So we click Neo, and then you want to go over to order flow, okay? Order flow is going to show you, the inflows, money coming in, and then the outflows, money coming out. But specifically, we want to look at large, because the large is the $1 million buys and sells, okay? As we can see, there was about 0.33 in large outflows. So it looks like some institutional investors were taking some money off the table last week. Because if we look here, it has the large scale orders always posted. So as you can see, red, a lot of big money selling last week. So that's just to give you an understanding when we run through these companies real quick. So Matterport, as you can see, large inflows and large outflows, 0. As you can see, it's blank. We have Paysafe right here. Looks like we have a little bit of an outflow on the earnings report. AvePoint, it looks like a little bit on the 17th, a little outflow right there. Desktop Metal, no large inflows, no large outflows, blank. Butterfly Network, blank as well. Marvell, it looks like there was some large institutional outflows, a little bit of red here and here, a little bit of green as well. Now, out of all of those companies we just seen, look, Skills is the only one with, a significant amount of large institutional inflows. As you can see right here, 17th, 18th, and 20th. So it looks like institutional investors really, really like Skills around $10. So as you can see, some of the big money is slipping in right now, buying up these dips. And that makes sense because, Skills, has a much higher price target. Open Door, no large inflows. A little bit of a sell-off on 19th. STEM, no large inflows. A little bit of a sell-off on 16th. Tattoo Chef, no large inflows. Looks like some selling off on the 18th and 19th. And last but not least, guys, look at SoFi right now, guys. This is ridiculous. We just covered every single company. I believe Skills was the only one with a large inflow listed. Look at this. Large inflows, 20%, guys. Look at the buys on the 20th on Friday. Absolutely insane. The 20% large $1 million USD inflows coming in, guys. As you can see, big money is cleaning up these dips right now in SoFi. We just went through, 10 plus companies, and this is the only one you're seeing significant large inflows coming in. This is absolutely insane. This just shows you, the smart money is buying up right now. Anthony Noto's buying it. Third Point LLC's buying. Silver Lake's buying. Large institutional buyers. That's what I'm here for, guys. I'm here to bring you more confidence in this stock to show you these price ranges right now are amazing and big smart money is taking advantage. Now, I've also been getting a lot of comments on the, student loans. Loans are, getting hammered and stuff like that. Let's just go off what the management, went off of, for the guidance. Let's just listen to management because a lot of people are afraid, they're not going to, recover from this student loans CARES Act being pushed to 2022. So this is exactly what they said. Management expects continued strong growth in the third quarter of 2021 with expected adjusted net revenue of $245 million to $255 million and expected adjusted EBITDA of -$7 million to +$3 million. Management reiterates its full year 2021 guidance of adjusted net revenue of $980 million and adjusted EBITDA of $27 million. Remember, guys, they put this 980 back out when they went public back in 2020 when they made the announcement of the deal. If they did not get hit by this CARES Act, student loans pushback, they would have blown out their guidance. So just to show you, if they're reiterating their guidance while taking this massive hit, it just shows you how strong the management is and how forward they are looking. They are not worried about this student loans impacting their business. They are prepared. This is despite lowering our expectations for student loan refinancing revenue by $40 million hit they're taking. That is pretty serious. Just reiterating the 980 gives me more confidence that when their student loans come back 2022, they are going to thrive due to extension of the CARES Act moratorium on student loan payments for September 30th to January 31st, 2022. Okay, so there you guys saw it, okay? They pushed back, the CARES Act, and they're taking a $40 million hit, but it looks like their other business models are thriving. And you can see that right here on their, earnings report, their lending originations. Home loans are up 49%. Personal loans are up 188%, while student loans, of course, is up 9%. So, guys, their other business models are, picking up, the leverage right now. Once student loans comes back in potentially 2022, this company is going to be firing on all cylinders. And let's not even talk about the additional boost to the student loans coming back, and that is potentially getting a bank charter approval, which is going to give them the ability to conduct their own loans, not having to go through third parties any longer. This bank charter is extremely important, guys, okay? If we take a look at their, revenue projections that they put out, they got a 980 for 2021 and a 1.5 billion dollars in 2022. Just to give you a summary of, what 1.5 billion dollars really is, Zoom and Snapchat, high growth, technology companies, they're doing about 4 billion in revenue this year. So to summarize that, Snapchat and Zoom are around, 3 years ahead of SoFi, as just in size of a company. So they're about 3 years ahead of us, and as far as revenue. But take a look at this. Adjusted EBITDA is potentially going to finish out $27 million this year. That most likely won't happen now because of the student loans. So it might, finish like 3 to 5 million or something like that. But look at next year, okay? Adjusted EBITDA is projected to be around $254 million. But if we scroll down just a little bit on this investor presentation, it goes over, the projections of the impact of a bank charter. So that 254 could potentially go to 447, almost doubled in EBITDA projections. So that's what kind of leverage, that, bank charter can give them with conducting their own loans. It's a massive, massive jump. But if you have a longer term outlook, things look really bright, for SoFi in the next 3 to 4 years. It gets insane. This could be a massive company in the future, but I still, just because of their revenue growth that they're experiencing right now with 74%, there's no reason that this company can't trade, at a 30x multiple if they can continue this growth for the next, 2, 3 quarters and get that bank charter approval. I'm really, really surprised SoFi is only getting 2 analysts, coverage right now. I believe it's just a way of, letting the big money load up on this stock right now. They don't want to break headlines, with, bigger analysts, putting higher price targets on the stock right now. So I think they're just trying to keep it quiet because this is a SPAC stock and it has a lot of growth, that's not priced in yet. So about $26 price target right now. I really think with the bank charter, we could see about $35 by the end of the year if we get more coverage, maybe 4 to 5. I'm surprised they didn't get a third analyst covering the stock after earnings, but it just shows these 2 analysts right now without a bank charter, are giving you about 88% upside, which is really good. And as you can see, big money's loading. Once again, I really hope you enjoyed the video. I just wanted to bring as much due diligence to you as possible on what the big money is doing, what the insiders are doing. Anthony Noto is buying the dip. Third Point LLC and other institutional investors were buying this stock around $19 price averages. And that bank charter approval is going to potentially double EBITDA next year. And only if you feel this video gave you a better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily. And don't forget to drop a comment. I'll be commenting back to as many people as I possibly can. And I hope you have a great day.